Hello everyone. Today we have chosen a topic that is very interesting, theory of constant throughput accounting. This concept has a wide business applications. Companies like 3M, ABB, General Motors, Coca-Cola apply these theories to perform better in the industry. To highlight the same, we have mentioned several companies which has incorporated their business structure to perform well. Theory of constant is a process of ongoing improvement. Theory of constant is an overall management philosophy introduced by the Goldratt in the book The Goal in 1984. The logic behind theory of constant is that constants establish the limit of performance of any system. Examples of constant may be market demand, resources, policies, etc. As a manager of a factory, we may think number of machine is a constant in our performance which can be defined as physical constant, whereas as a manager if we think only large production is optimum, then it becomes our policy constant. So manager should focus on managing the capacity and capability of these constants to improve performance. Constants are generally used as a term bottleneck. Here we firmly believe that a chain is only as strong as its weakest link. This means process, organization are vulnerable because of the weakest person or part that can damage or break them and lead to affect the outcome. So in this concept, we are looking for a holistic approach in running a business and focus on overall development of an organization as a whole. So improvement will take place which make not be necessary involve substantial amount of resources. There are several uses and benefits of theory of constant. They can be in the form of reducing bottleneck or say focusing on reduction of inventory level. Theory of constant leads to a dramatic increase in the products and services, thus provides an edge in competitive business world. It helps in planning to curb statistical fluctuation. The whole concept evolves on management of constant, which an organization faces and leads to achieve one of the main objective of organization through attainment of high level of profitability. It also helps decreasing the production lead time. Thus, several benefits of theory of constant helps to have overall development of individual organization and together leading to economic development of the world. The underlying premises of theory of constant is that organization can be measured and controlled by variation on three measures: inventory, operational expenses and throughput. First one, inventory is all the money that the system has invested in purchasing things which it intends to sell. Secondly, operational expenses is all the money the system spends in order to turn inventory into throughput. Lastly, our core area, that is throughput, that is the rate at which the system generates money through sales. Throughput accounting is used as a performance measure of theory of constant. It is a management accounting approach which goes in alignment with just-in-time approach. Traditionally, we used to produce things and then try to sell them in the market. Whereas in agreement to just-in-time environment, we produce products only when there is a specific demand for that finished goods. When there is a demand for a component of finished product, then only produce that component. When there is a demand for the raw material of the component, then only purchase the raw material from market. So here we are looking for a seamless production process, an uninterrupted process which focuses on minimum or no level inventory, as inventory is not considered as value added part of organization. Here factory is considered as a single operation and focuses is on the constraint or bottleneck within the factory. Thus, we see careful in throughput accounting, we are trying to manage bottleneck once identified. Here the idea is to produce goods when there is a demand for the product. Every unit process is coherent to the main goal. Let's go through the various steps in throughput accounting which will help us to attain the same. As discussed, we will first try to identify constant or bottleneck of the organization which limits their performance. Secondly, once after recognizing the bottleneck, we'll focus on utilizing the bottlenecks. All other activities can be scaled down to match with the bottleneck. Once all the activities are in sync together, then try to find ways to remove bottleneck which hinders the performance. When we are successful in removing the bottleneck, we focus on last step, that is to find out the next bottleneck. So as said earlier, it is an ongoing process of improvement. Let's take an illustration to make it clear. Suppose there are 4 processes in sequential in a factory, and their capacity of production in terms of units per week are: process 1 can produce 300 units, whereas process 2 can produce 250 units. Similarly, process 3 with 350 units and process 4 with 200 units. If we look these processes traditionally, each process in charge will be inclined to achieve maximum output per week. In this regard, process 3 is considered as the best, as they are able to produce 350 units per week compared to any other process. But as we said, all the processes are interrelated, which is generally the case. So there is no point of producing 350 units in a process 3 if in final process 4 output is limited to only 200 units. Thus, if we continue doing, we are actually piling up stock 150 units. So it reflects sub-optima. So in throughput accounting, we are not looking for an individual optimization of process, but overall optimization of a factory. Does not matter the efficiency of other process before or after. Bottleneck on his own defines the overall efficiency of a factory. Therefore, when we measure efficiency, we measure in terms of bottleneck. So process 4 is the constant that limits the overall production, known as bottleneck for us in the example. So applying the steps, firstly here we can identify a bottleneck, that is process 4. Then we try to subordinate other processes by producing only 200 units as per our bottleneck process 4. Thirdly, we will focus on eliminating a bottleneck, that is increasing the capacity of process 4 through internally by way of more labor, more shift of machines, or by new machine. If internally the same is not possible, then try to do externally, maybe through outsourcing. Say with the help of any of one measure, we are able to remove the constraint and able to produce 400 units in process 4. Then the last step will try to identify another constant, and in this case it will be process 2. We will follow the same process again and it will keep on going. Now let's have a look at a demonstration for better clarity of our concept on theory of constraint.
A 1 liter bottle is filled with water and is upturned. All the water has to flow through the bottleneck. This demonstration covers 3 scenarios using 3 identical bottles, but there is a difference in the flow dynamics. In each demo, kindly observe carefully what happens. Firstly, the occurrence in the bottleneck itself, dynamics of the flow through the bottleneck, and the dynamics of the rest of the system that is inside the bottle. Let's look at the following 3 scenarios. In the first demonstration, the bottle is upturned to let the water turn out by itself. The clock starts when the bottle is overturned and stops when the bottle is empty. It takes 18 to 20 seconds to let the water run out at a rate of about 4.5 liters per minute. Observe the bottleneck where the water started to flow, but it creates a vacuum inside the bottle. This vacuum caused the flow to stop momentarily and allows an air bubble into the bottle. The vacuum inside is relieved by the air and causes an equivalent amount of water to flow out of the bottleneck. This process is repeated until the bottle is empty. It is a continuous process of stop, start, and flow. Secondly, inside the system, the result of stop, start, and flow is turmoil. There is a lot of activity, but it does not increase the rate of flow. There are lots of unpredicted conflicts, many internal processes that do not add volume, and the system becomes captive of its own internal processes. It is the demonstration of the world of local optima. In the second demonstration, the bottle is overturned and then given a few good turns to generate a swirling motion. This generates a vortex that allows air to flow into the bottle while the water runs out through a swirling spout. What do you expect to happen? Will there be any improvement? Observe closely what happens in the bottleneck as well as what happens in the bottle itself. It takes about 11 to 13 seconds for the water to run out at a rate of about 7.5 liters per minute. This is nearly double the flow rate of the first demonstration. Firstly, in the bottleneck, it took a second or two to get the water to generate the vortex. The vortex allowed the air in while the water ran out in a circling motion. The water and air each have its own path, and this created an uninterrupted flow through the bottleneck. Secondly, inside the system, all the water particles were aligned in the same direction. Everything was subordinated to the generation of directional flow. This is a good demonstration of theory of constraints in a physical flowing environment. In the third demonstration, a straw is added to channel the airflow. The bottle is overturned and airflow through the straw to clear the water from the straw. The pressure from blowing also starts the process of flow. Take note that the straw has reduced the capacity of the bottleneck. What do you expect to happen? The clock starts when the air is blown through the straw. It takes about 4 to 5 seconds for the water to run out at a rate of 18 liters per minute. This is about double the flow rate of the second demonstration and about 4 times the rate of the first demonstration. What happens this time? Firstly, in the bottleneck, the flow was super fast. It was stable without interruption and more than 4 times the rate of the first demonstration. Secondly, the system inside the straw was characterized by calmness, stability, and absence of turmoil and pressure. It is possible to have superflow with a spirit and culture of calmness. It is done by doing the right things with the right demonstrations with the right equipment. Firstly, in the 3 demonstrations, the bottleneck remained the same. It illustrates that the theory of constraints is not a process of debottlenecking the operation. It is a process of increasing the flow through the bottleneck. Secondly, if you follow the right approach, you can eventually get both superflow and a spirit of calmness simultaneously. In order to do this, you need to address the physical flow and the people aspects of business simultaneously. Applying the principles of the theory of constraints and optimized flow can significantly improve the business.
Throughput accounting is neither cost accounting nor costing because it focuses on cash profit. There are several differences between traditional costing and throughput accounting. 1. Traditional costing focus on reducing expenses and cutting costs, but in throughput accounting, we seek to increase the speeder rate of constant and thus lead to increased profitability. Number 2, throughput accounting favors in approaching no-level inventory. Thus, inventory is considered as liability, whereas inventory is an asset as per the traditional method. Thirdly, in traditional costing, we allocate variable cost and fixed cost to the product, whereas in throughput accounting, we only allocate variable cost. Here we consider only material cost as variable cost and labor is considered as fixed cost in most of the cases. Labor are considered as fixed part of the organization, therefore considered as fixed cost, which is not in the case of traditional costing method. With this introduction, I would like to ask Dr. Kavitha Jayakumar to take over further into the topic.
Thank you, Dr. Veerta, for the introduction of throughput accounting. And now let's go through the topic in depth. throughput and traditional cost accounting concepts. It is undeniable that the traditional cost accounting system assisted managerial decisions by providing operational measures of cost and efficiency. Conventional accounting system emphasize on cost absorption and standard cost variance analysis. Managers under traditional cost management perspective focus primarily on decreasing the unit cost. Others may be less concerned with the unit cost, placing their emphasis on decreasing the operating expenses and inventory, that is investment of the organization. In this setting, very few managers focus on increasing throughput or the output of the plant. TOC presents a significantly different perspective on how best to control operations. TOC advocates behind these worrisome trends lies the management accounting system and its excessive focus on unit cost and allocations. Specifically, they suggest that conventional cost management criteria are harmful in two ways. Conventional approaches can divert focus from meeting the objective of the organization. Application of convention accounting may actually decrease profits and throughput. Absorption costing means that all of the manufacturing costs are absorbed by the units produced. Excess inventories are a signal that production should be cut back. This can lead to unabsorbed overhead in the traditional cost world, but under TOC, reducing inventories results in increased throughput. Specifically, some TOC proponents maintain that only the cost of raw material should be deducted from sales to derive throughput. Others, though, take a more moderate approach, noting that any cost that acts in a truly variable fashion should be deducted from revenue to determine throughput values. Relevant cost analysis is a key element of TOC, as is noted in any reasonable management accounting text, though relevant costs do not include all the cost elements found in the traditional product cost. As with the traditional accounting models, TOC recognizes that costs that do not differ between alternatives are irrelevant to managerial decisions. The specific estimates TOC advocates that should be considered in decisions such as when to add or drop a product or operating cost reductions that will be experienced if production is eliminated compared to the reduction in throughput that the loss of the production will create. ABC considers all costs to be variable in the long run under the relevant time frame of analysis for many decisions. In contrast, TOC is oriented more towards short-run optimization where most costs are fixed in nature. Main difference between ABC and TOC is not only time orientations. TOC addresses the concerns of mission-intensive departments, while ABC has more information value for people-intensive areas. Generally accepted accounting principles are concerned with the measurement of economic activity, the time when such measurements are to be made and recorded, the disclosures surrounding the activity, and the preparation and presentation of summarized economic information in the form of financial statements. There are several areas in which throughput accounting varies from GAAP. The most important issues is that GAAP requires that overhead costs be allocated to inventory, which in turn may or may not be charged to expenses in the current period. The exclusion of all the overheads from inventory costs does not constitute an accepted accounting procedure. If throughput accounting were to be used for the construction of an income statement, the format and the content of the statement would appear slightly different than what would use under the GAAP guidelines. It would only include direct material in the cost of goods sold, which would result in throughput contribution line item instead of a gross margin. The two versions of the income statement are shown in exhibits. Reconciling throughput accounting to GAAP. Virtually all companies have accounting systems designed to follow GAAP guidelines, while throughput accounting is primarily used by the cost accounting and financial analysis staff. Therefore, since the GAAP system is already in place, it is much easier to convert the result of the existing GAAP system to throughput results rather than do the reverse. Throughput accounting and cost plus contracting. In addition to GAAP, It may be necessary for the throughput accounting system to issue reports that follow yet another set of guidelines needed for cost plus contracts. Under a cost plus arrangement, a company is allowed to charge a customer for the cost of all the materials, labor and overhead incurred while engaged in the project on behalf of the customer plus some predetermined profit percentage. Cost plus arrangements are commonly used by the government entities to compensate contractors for very large construction projects or research projects where the outcome is in such doubt that contractor refuse to be compensated under fixed fee arrangements. Throughput and control system. The typical company installs a myriad of controls throughout its operations and accounting systems which flag many divergences from planned performance. However, a company focusing on its constrained resource will adopt a different approach where the bulk of its controls are centered on the three chief elements of the constraint management system: the constrained resources, the inventory buffers located in front of the constrained resource and final assembly, several aspects of production scheduling system. Buffer controls. Buffer control falls into two categories: the daily investigation of the late arrival of material at the buffer and the long term determination of the correct size of the buffer. Throughput and management accounting. Management accounting originated from the 19th and 20th century together with industrial revolutions. Systems to track cost became needed as decision support for the managers when the industry started to grow, become large scale and more complex to run, as referred by Johnson and Culpen in the year 1987. The companies grow come to be funded by external investors, which lead to the development of traditional financial accounting systems to be the base for performance measurement in manufacturing, as referred by Swamidas in the year 2000. Findings. Cutting cost is important, but it is not the most important factor in maximizing profit. In today's world of global capitalism and shareholder expectations, companies are seeking ways to expand in every area: profit, quality and so on. Today's marketplace requires companies to focus on throughput. This requires an understanding of a company's constraint and how changes will affect the constraint. Throughput accounting enables managers to examine the link between process constraints and financial performance in decision making. This makes it possible to determine the real impact of the decision. Before the decision is made, a company can look at the impact on throughput and compare it to the effect on operating expenses and the required investment, solving the decision making problem for managers. Paper contribution. Conclusion. Throughput accounting focus on increasing revenue, that is throughput, improving cash flow, that is investment, and providing capacity, that is operating expenses. Every management decision is made based on the expected changes in throughput, investment and operating expenses. Throughput accounting allows managers to take a more balanced approach to decision making, giving an accurate picture of the result of decisions. Throughput accounting also demonstrates ways to make more profitable pricing and marketing decisions. Throughput accounting shifts the emphasis in decision making from managing cost and budgets to maximizing throughput and profitability. It emphasizes the improvement of flow through system, proving feedback on the financial impact of the constraint. It drives management decision to improve the constraint's efficiency, ensuring all company resources support the constraint so that profit can be maximized. This approach differs substantially from traditional cost accounting because a company is not focused on every machine and employee working at the optimum efficiency. Instead, its basis is that if the company optimizes any non-constraint, it will overload the constraint and create excess inventory. Throughput accounting provides a way to measure productivity improvement efforts based on how they affect cost and throughput. It can be applied to decisions that affect all the aspects of the company, including product price, process improvement, reward structures, investment justification, transfer pricing and performance management. The result is a thorough understanding of how a company is functioning as a whole and the ability to analyze the true impact of management decisions before they are made. Ideas for further research. The first step to understanding world-class business concepts is to recognize where the varied philosophies agree and where they differ from traditional mass production concepts. Lean and TOC are the best examples, but many others are out there like demand flow technology, velocity, etc. To engage in sustainable real world implementations, it eventually becomes beneficial to embrace one specific philosophy, but it does not require rejecting the others. The real breakthrough is teaching others to reject the concepts of traditional mass production which have become intuitive to us all. To undermine one or the other diminishes the potential for a revolutionary breakthrough toward either. A key to fully understanding TOC is that it is not just a system of eliminating constraints, that is bottlenecks, but more a system of managing constraints. A truly enlightened organization will know exactly where it wants the constraints to be. Constraints are a reality. The question is whether you want them to be internal, where you can control them, or external, that is market. A company that is in control of its own destiny can use its constraints like a valve to control and continually promote the flow of value. Hope now you have a better understanding on theory of constraint, throughput accounting. Thank you for your patient listening.